Hello, everyone, and welcome to Tax Talk for Realtors. We are going to get this going here in just a moment. We are going to get that waiting room opened up because we know we have some of you coming in from various locations. So we will get to that waiting room open.
Every day is a new roll of the dice. Yeah.
And guys, do please go ahead and mute yourselves on the way in. This is being recorded, so you will be able to have all of your information again later. If you're an exit strategy realty agent, the slides from this we will also share with you at some point as well. So we're going to go ahead now and get started. And that wonderful, beautiful woman in front of you is our office business manager, Angela Lakes. So Angela is in my living room tonight. I am behind the scenes, so you will not see me. You will not have to worry about me bothering you tonight. However, this is going to be a session that I'm going to be walking you through the slides as Angela presents to you. So I'm going to go ahead now, and Angela, you're going to be able to see in a moment behind you what exactly everyone else is going to see too, which is the PowerPoint. So everyone at home, just give us 1 second here. We're going to pull up Angela's PowerPoint, and then we're going to get that on the screen here so then everyone can see what Angela and I see on her screen at home. And so for everyone out there that doesn't know Angela, Angela, do you want to go ahead and introduce yourself?
Yes, my name is Angela. I am a tax professional as well as business manager with Exit Strategy Realty. I've been in the business for over 20 years, and I've been doing taxes personally for the last 10 years. So I just wanted to connect with Nick and reach out to our agents and other agents to kind of give them an idea of some of the last minute things that you may need to be looking for when filing your taxes. The deadline is April 15th, so we have about 12 days to get our information together. And for those of you who may have questions, please jot those questions down. So we'll be able to answer those at the end of the session, right, Nick? So we'll be able to answer those for you. We won't take extensive questions, but just general questions that you may have regarding your taxes at the last minute. So I'm sure that many of you have not filed your taxes as of yet, and a lot of independent contractors, and not just real estate agents, but independent contractors in general are kind of afraid to file their taxes. And a lot of them are a few years behind or a year or so behind. And I just really wanted to advise you guys that the best thing to do is to file. Do not hold back on filing if you don't know what to do. Definitely contact a professional, a tax professional such as myself, and get some advice on filing. Not filing is the worst thing that you can do. So I just wanted to start by giving you guys a few ideas of some things that that will help you if you haven't already done this thing or haven't already started preparing your information. So the things that you will need to go ahead and file your taxes. First of all of your income, whether it be income from real estate, from income from retirement, income from W-2, interest income, dividend income, any kind of income that you receive that requires you to file taxes. Now, Social Security income is you're not required to pay taxes on it, although some people choose to offset other income taxes, which is totally fine to do so. So the first thing you want to do is to gather all of your incomes. Gather all of the income that you had for 2023. The next thing that you should do is gather all of your expenses. So let me just start by saying this. A lot of times people get confused with what they will be able to claim on their tax return. So let me start by saying this. There are two large deductions that you would be able to claim. There is a standard deduction, and for 2023, that standard deduction amount for a single person is $13,850. Now, you can't claim a standard deduction and itemize your deductions. So you're going to choose the largest of the two. If you know that your expenses will not outweigh that $13,000, that's for single. So if you're married, obviously that would be double, and head of household, that would be about 20,000. So if you know that your expenses will not outweigh that dollar amount, then there's no need to even start looking for your expenses. You're going to use the amount that the government automatically gives you and to take that for a standard deduction. Now, for real estate agents, generally that does not apply. Majority of the time, we have way more expenses than we have than that $13,000 standard deduction. What I'm coming to realize is that we're not taking advantage of those deductions. We don't have any idea of the things that we should be deducting. So I'm going to give you just a little overall view of some of the things that you should be deducting from your real estate taxes. I mean, from your taxes as a real estate agent. So some of the things that you should be deducting is
Should I be moving the slides?
yes, I'm sorry. I'm sorry.
Your presenter is, you're behind the scenes, man.
I was thinking you would know. I'm sorry. I should have been, you can keep going. Yeah. So that was standard versus itemized that we just discussed. Yes. And that's that's a great slide. So for those the standard deduction, those are the standard deduction amount. You can see in 2023, if you're single, that amount is $13,850. $27,700 if you're married filing jointly. Married filing separately is $13,850, and then if you're head of the household, it's $20,800. And just to give you an overview of the filing status, which is something that I should have covered originally. Now, if you're single, I don't have to explain that. You're single, it's just you. You have no, sorry, go back. You have no dependents in your household, then you would be claiming single. If you are married filing jointly, then you and your spouse and or domestic partner that is going to be filing together, and that will cover the two of you. So you get double of that standard deduction. Now, if you're married filing separately, that is a really confusing one that people do not take advantage of. And actually, sometimes it can be a disadvantage if you're married filing separate. If you marry filing separate and you have to tell your accountant all of your spouse's information. Any way that your spouse filed, you will have to file the same way. So just for example, Nick and I are married and we are separated. And Nick is going to be itemizing all of his real estate expenses. However, I live in another house, and then I am like head of household, or if Nick takes itemized deductions, I have to take itemized deductions. So if you're married filing separately, although you may not be even communicating with your spouse, your taxes could be rejected if they file itemized and then you try to file standard, or vice versa. So you definitely want to especially if they include your information on their tax returns. I do find a lot of people that are married filing separate that they just say that they're single on their tax returns. That's really not legitimate. If you're married, unless you're legally separated, if you're married and going to be filing separate, you should be putting on your tax return married filing separate and communicating with the other party as to how they're filing so that you both know. Now, a lot of married people filing separate, if there's dependents involved, let's say you have two kids, one spouse is claiming one child and one spouse is claiming the other child, the two of you both can file a head of household, but the way you do your deductions have to be the same. So I hope that makes sense. Okay, now, this is for the people who are filing itemized, and these are some of the things that you can file. Charitable contributions, you can do your medical expenses, your state and local income taxes. For real estate agents, you have so many things that you can be filing. The car dues that you pay, your exit dues that you pay, your century lock that you pay, your mileage from when you're riding around, your car repair. But you only can do the percentage of what you're using the car. So, which is why I tell all of my people, you do still want to keep up with the mileage if you're doing the other depreciation and other deductibles for your car. The reason being is the mileage gives you a specific percentage of use. So if you're tracking your mileage, and I do suggest that you guys use Miles IQ.
Just gonna ask that up.
Yep.
Yep.
It's very good for tracking the mileage. It prints you a report and everything. Miles IQ tells you the total amount of mileage that you've traveled, the business, if you do it correctly, the business miles that you travel, and the personal miles that you travel. Then it'll give you a percentage. If you put all of those together, you'll get a percentage. So when your tax accountant enters that information into the system, it'll tell you what percentage was business. And then it will also tell you, that the percentage of gas you use for business, the percentage of whatever car repair. So if you did 75%, whatever car repair amount you put in, it'll only take 75% of that to do for your deduction for your cars. So make sure that you do even when you get your car washed, because when you go into your showings and everything, you want the car to be clean. You don't want to pull up in.
Yes, you do. Yes, you do.
So
Please have a clean car.
your car to be clean. You want it to be smelling good, and you definitely don't want to pull up in there and you haven't had your oil change and your car is making noise and doing all of that. So make sure you keep your car up, but also make sure that you use those deductions for your tax returns.
Can I just interject one thing? 'Cause we already have a question from the audience.
Yep.
And that is that there are going to be, if you're an exit realty agent, you are going to have two different 1099s potentially. And so Angela, could you explain the difference between the two 1099s?
Yes, so you are going to have a 1099 from me, from all of your commissions that was paid. Now, the 1099 from me, and I do get a lot of questions about this, this will be your net. It will not be your gross. So any fees that were taken off, we don't distribute the 1099 for the fees. We only give you the 1099 for the amount that was deposited into your bank account. So then that's the 1099 for me. That's for your commissions. The other 1099 that you'll be receiving will be for your residuals. For those of you who are receiving residuals, you'll get the 1099 from Exit Corp for that 10% that you get for your recruits. So you will get a 1099 from Exit Corp, and both of those are considered income. So you should definitely have both of those 1099s as your income.
And your behind the scenes operator would like to remind Exit Realty agents that you can find that 1099 in your Exit Realty Connect app, as well as in the Exit Resource Center under reports. That is the one from Exit Realty Corporate. The one from Nick Labert Properties, Inc., doing business as Exit Strategy Realty, comes from Angela.
So some of the other things, I just want to go over a few things. I'm just going to go over a few things that you guys can be right now. And I mainly want to mention the things that I see you guys missing. For those of you who have done your taxes, I see you guys missing a lot of your subscriptions that you have. I see you guys missing a lot of, for your accounting software that you're using, for your cloud storage space that you're using, any publications, any software that you have, like if you have Adobe, Microsoft, or any of that software that you're using, DocuSign, you guys, I know some of you guys use DocuSign. Now, you cannot write off the things that Nick Labert is paying for you. So you can't.
You can't write off Dot Loop, Wise Agent, Zenlist, any of that stuff.
But you can Right, I also see people missing a lot of the real estate classes that they're taking. Car, make sure you have your car dues and stuff on there. Any continuing education classes.
Any designation classes you took this year, any photographs that you did, that you had taken outside of the brokerage that weren't reimbursed by the brokerage? You got digital business cards from Exit, but any printing you did that you didn't blow up our office printers and use, anything like that, go to your credit card statements, go all the way back and look, because I just found a bunch of stuff that I've got to turn into Angela. I've got a subscription to I have upgraded cloud storage both in Google Drive and in Apple.
Yes.
That's only for real estate.
Yes, all of those things. Business cards, flyers, brochures, signs, and some of you guys use social media, like you have a Facebook app and Instagram app that you have the business part that you have to pay for. So make sure you include that, lock boxes. You have printers and scanners and things of that nature. Also, the last couple of days, the agents that I've done their taxes have missed their cell phone bill, which I don't know how you guys missed that. Now your cell phone bill is almost 100% of your business. So you should be writing off your cell phone bill in its entirety. And then another thing that agents do not write off, but they do have, and I'm sure that some of you guys have this because you're not coming into the office and seeing me. So you probably have a home office space. Because a lot of you guys don't come into the office and you do work from home. If you have a specific space for your home office, now it cannot be a corner in your living room. It has to be specifically your home office. Then you can write off that percentage of your house. So let's just say your house is 1,000 square feet and your office is 250. Then a fourth of your rent, your utilities,
My condo assessments?
yeah, a fourth
Oh.
of your condo
Oh.
assessment, you can write off on your tax return. So that's a huge one. But let me just say again, it specifically has to be used as an office space. It cannot be a corner in your house.
So just for those of you guys that have been over to my house for First Fridays or things like that. So my condo, paid for by Exit Realty Residuals, by the way, my condo, about 1,550 square feet. So you're looking at it. I can't claim this condo, but I can claim that little office room that you guys see me doing the rest of my Zooms at.
Yes.
So that room is about 20% of this house, which means 20% of those bills.
Yes.
Perfect.
He can write off 20% of those bills. So I just really wanted to go over, most importantly, for you guys to be filing your income taxes. And if you are behind in filing those income taxes, go ahead and get in touch with me so we can get you caught up on those taxes, and then also get 2023 filed. And I also wanted to reiterate the importance of getting them filed and claiming all of your deductions. Now, for those of you who are not only just doing real estate, but you also have W-2 income, that's totally fine. You still should do your real estate income. So I noticed that a lot of people will only file what they have a W-2 for. Keep in mind that the government knows that you have a real estate license, and we as Exit are required to report your income. So we don't want you to get in trouble for not doing your part on and filing that portion on your taxes, because eventually they will catch up with you, and then you'll have to pay back taxes, which could be worse than just paying taxes ahead of time. If in fact you've made so much money that you do owe the IRS a significant amount of money, keep in mind that the IRS actually gives you just as long as you get for your mortgage to pay off your taxes, just about. So they give you a long time, and you can set up a payment plan with them to pay as much as you can for a month. But the worst thing to do is to not filed. Once you get your taxes done, your tax preparer can set up that payment plan at the same time for you, and then you can be on a monthly payment so you can get those paid. I also suggest that you do start doing a quarterly filing, which if you reach out to me, I can show you guys how to do that. You want to take your income for each quarter, and then we can calculate together how much you should be paying on a quarterly basis. And I'm not sure if he's on this call, but I do want to give Andy O a shout out because Andy O is very good about keeping track. He keeps track of all of his information, and he's really good about taking care of his business with the IRS. So he does that very well. So, but if you guys need assistance with doing that, please reach out to me. Let me help you get started with doing that. Also, if you guys are having a hard time keeping up with your expenses, this I think is the main problem with real estate agents. They try to gather everything at the end of the year. One of the things that I would suggest first is that you open up a business account. Use that business account specifically for your real estate business. Don't you dabble into your personal or have things coming out of your personal and out of your business account. If for some reason your business account doesn't have enough money for you to do all of your business out of there, then go ahead and give your business account a loan, but still pay your expenses out of that particular account. One other thing that I wanted to mention to you as agents, if some of you are thinking about setting up a different formation of business, I do realize that a lot of you are operating as sole proprietors at this time. I definitely suggest that you speak with an attorney, or if you know and have information yourself, you can go to irs.gov and see the business formations. Actually, Nick, you want to talk about? Nick has a presentation regarding the formation of businesses. You guys should really take a look into that so that you make sure that you form your business with the greatest tax advantage possible. So Nick has a presentation regarding that if you guys want to take a look at that. You may want to change from being a sole proprietor to a LLC, to a S Corp, definitely not a C Corp, but definitely to a S Corp or LLC. So I definitely suggest that you guys look into that because it's the beginning of 2024. Now is a good time to go ahead and make that change. Nick, can you tell them where to find that information?
Yes, absolutely. So I'm just gonna pop on the screen just for a second, everyone. Hello, it's me. So we are in my home, and I want to say a couple things. Number one, what an amazing resource if you are at our office group to have a business manager who also happens to be a tax professional. A couple things. Number one, don't mess with the IRS. Take it from me. I have played games, and those games did not end well. Angela knows. Some people that are in my personal friend group know it did not end well. Get on an installment plan, file your taxes, deal with the mess, because it will only get messier if you do not.
Mhm.
Trust me from experience. As far as corporations go, if you are at our office, because I know this video is gonna go out. If you're at our office, it is in the coaching blog. I cannot show you if you're not at our office because it has my personal information on it. If you're at my office, go to teamlibrary.com, request to access the private coaching blog if you're not already there. And they're in there, just type up S Corp, and literally I show you and I walk you through how I filed to do the S Corp for our title company. So I literally did a live demo during COVID. We had a lot of webinars during COVID, right? One more thing, I'm gonna pop out of this and let the master go back to work here. When you are filing, another mistake, learn with Library, learn from my mistakes. There were years that I was very strict with taking deductions. I had boxes of receipts. I took them all. And then I went to go get a mortgage. And guess what? They didn't want to loan me anything because it looked like I made no money. So, we're doing vision board party here Friday night for our agents. If it's on your vision board to buy a property in the next 2 or 3 years, so maybe that means you got some credit cleanup, things like that, please do yourself a favor. Be conscious of that. I'm not saying don't write anything off, but be conscious that you have to show earning power. Your 1099 residual income can be a 6-figure residual income. It has been for me for a decade. It's real money, but only if you work the system properly within exit. You
Yeah.
also have to work and get your sales commissions, be honorable about how you take those deductions. Now I'm gonna pop out of the screen.
Yeah. So, do we have any questions that we want to go through as of yet?
So we do have one. I'm gonna stop the screen share just for a moment because I want to see what that question is in case it's private. And guys, remember, this is being, this will be shared. So if you've got private questions, there is someone mentioning that business expense deductions are taken on Schedule C of the Form 1040. And that's if they're a sole proprietorship, and they should not be taken as deductions on Schedule A.
They should not be taking the deductions on Schedule A. That is correct. They're taken on Schedule C. Also, a lot of our agents do rental property, and rental property is taken on Schedule E. And you shouldn't confuse those two.
Perfect. All right. So we don't have any questions yet. So Angela, I would like to continue the screen share because we do have that conversation about, let's talk about it. If we're here trying to get people buying homes, investing in real estate, we have that investors club. We want you guys to invest in real estate. Let's have that conversation. So I'm going to get back into that PowerPoint piece here. Just give me 1 second because I accidentally closed out part of my screen. There we go.
That we they're purchasing a home. Let me get to that. Which I do not.
And guys at home, when you see Angela in the office, make sure to thank her because this is she's taking time out of her evening for you. She will be, while she's looking through that for this next slide, purchasing a home. We also want you to note that obviously, consult a tax professional. Angela is there tonight is the tip sheet. If you want her services as a tax professional, I would love to be able to pay for that. I can't. You have to pay for that separate from our daily day-to-day. So this is your primer. If you have a tax professional, go talk to them. If you do not, we have a wonderful tax professional. You're looking at her. But there's going to be a Calendly link, and we're going to talk about how to do that at the end of the presentation. So just wanted to catch you guys up to speed on that.
So for this actually what the purchasing a home the purchasing a home flyer, the tax limit, the state and local real estate tax limit. Now this actually, let me just preface by saying this particular page is actually from 2022. So this amount may have increased, but state and local real estate taxes are subject to a $10,000 limit. That's as of last year. The home mortgage interest is allowed. Well, there are limits on that. These are just some of the deductions that you can take when you purchase a home. Like a lot of people who are, especially single individuals, they don't have deductions. And this is not specifically for real estate agents. This is just for individuals, period, when you purchase a home, because a lot of people are still renting. And this is some information that you want to share with your clients. Especially your clients that are single, that let them know that this is how, especially if they're single, they're making a lot of money and they want to know why they're having to pay so many taxes. This is one of the deductions one of the things that they can deduct on their taxes. And a lot of times, this is one of the largest deductions. This is one of the things that you want to use to encourage them, those who are renting and haven't yet made that leap to go over to purchasing a home. This is one of the things that you want to share with them, some of the deductions they will be getting as an individual on their tax return. So that was it, actually the purpose of the slide. Purchasing a home. As far as purchasing a home, I'm not a real estate agent, as you guys know, and Nick can talk to you guys about that more. But I did want to put this particular slide in here because this is what we do. This is what we do here at Exit is sell homes, and this is a point that you can make to your clients, especially those who are still renting, a point that you can make to them to let them know how to capitalize on their tax deductions.
That is huge, guys. So this slide, take a picture of it, remind everybody out there, if they didn't like their tax bill this year, this is a reason to be purchasing property moving forward. So, huge value in that.
Man, that's just, that
That-
was just the saying. What do you own? He is not full man who does not own a piece of land.
I love that. So should we continue on moving through the slides?
Actually, that's, I've covered pretty much.
I
everything
believe that is the slide presentation.
That's all, that's everything that I have for you guys. Just wanted to pop in before the tax deadline and offer you guys some information, and hopefully hopefully most of you have already done your taxes. If you haven't done your taxes, please, if you don't reach out to me, please reach out to a tax professional and get those taxes done. One last thing I did want to remember that if you are not going to be prepared by April 15th, you feel you can't get your information in by April 15th, then you do want to go ahead and file an extension to do that, which gives you an additional 6 months to go ahead and get those taxes prepared. I wanted to let you guys know though, when you file an extension, that does not extend the payment time, which is a lot of confusion. You don't get an extension for the payment. So if when you file your taxes, you owed $6,000, now when you file that extension, you're gonna owe $6,000 plus interest, and you may owe some penalties. The penalties are reduced when you go ahead and file that extension, but if you owe the payment is still due April 15th.
So we had a question from the audience. If two unmarried people purchase a home together, how do they split the mortgage interest deduction? That's a great question.
That is a one.
I don't know the answer to that at all because I'm single as you know what.
One of them has to take it. So both of them can't take it the same year. So what they do is what they want to do is offset the years that they're going to take it. They can't split the deduction.
Ah, all right. So I need to find a friend real quick. Where's Taylor Meadows?
Yeah, so, and you guys, you want to look to low. So let's just say what you want to do is you say if one of you are going to owe and one of you not going to owe, then you want to give the deduction to the person who's going to owe. So you want to try to maximize that benefit. And then you just make an agreement with them, like you file this year, I'll do it next year. If neither one of you guys are going to owe and it'll help you guys get a refund, then you want the person who gets the most on a refund without the other person owing as much, then that's the person who wants to take it, but you can't split it.
And this is something that, by the way, guys, it seems that it's going to be leading into one of our upcoming trainings for the community is going to be a wills, trusts, and estates class, because you are looking at, you're looking at Angela, but behind the scenes here is someone that needs to update their will real bad and get some stuff in place. So estate planning is going to be an upcoming class for us. Before we get to any other questions, Angela, how do people schedule time with you to actually book and have a formal one-on-one session where they can get their taxes prepared?
So I can give you, you can book an appointment with me via Calendly, but also you can just go to my website, www.aeistewards.com, and you can schedule an appointment through my website.
So that is www.aeistewards, STEWARDS.com.
Yes, and you can schedule an appointment with me through my website, and then we can speak that way.
Wonderful. So I'm going to go ahead and very quickly for you guys at home, I'm going to go ahead and share my screen one more time. I'm going to type in that address for you guys just so you can see it quickly. That is, again, www.aeistewards.com. And you'll be able to then book with Angela online. You can contact her there and all the different information on how to get your taxes in order. Before we let you guys go, Angela.
Just one more thing I wanted to, I not only prepare taxes, but I do also offer a bookkeeping service. So for those of you who don't want to do the bookkeeping, don't want to get QuickBooks and do all of that, I do offer a bookkeeping service. Also, for those of you, I do understand that the real estate business, like a lot of other businesses, you don't have business all year round, or sometimes it's slow, sometimes it's good. One of the things that you can do with my services, I offer a subscription, so you can pay for your tax preparation all throughout the year. So you can do, there's a monthly subscription that I have. You can pay a small amount of $40 or $50 a month. And then when it comes time to prepare your taxes, you've already paid for them.
Well, ladies and gentlemen, this was wonderful tonight. We don't see any further questions in the chat, which means it is time for you to decide how to get your taxes done. And we would strongly advise you consult with Angela, and we look forward to seeing you all soon. Thank you so much for being here. This has been recorded and will be on YouTube shortly. Good
Thanks,
night.
guys. Have a good night.